Thanks for joining us. I'm Sage and you're watching the Crypto Buzz by 𝐊𝐶𝐿 TV, our weekly report which brings to you all the trending news from the world of cryptocurrencies. And what a week it's been for the cryptocurrencies. At a glance, the crypto market cap has tipped the $2 trillion level, with Bitcoin's price having risen above the $50,000 level. It has broken out of the consolidation scene last week, which could make an opportunity for it to be more bullish. It's currently sitting at around the $49,400 level, but we are all waiting to see what the price of Bitcoin will be at the end of this week. Being the end of the month, the CFD contracts are due to expire, which should give more indication as to which way the price of Bitcoin will go. And the altcoins are snapping up some of the investors' attentions as well, with Cardano, Ripple and Polkadot all showing price increases in the double digits over the weekend. But the crypto space is extremely volatile and any uptrends could easily switch to a downward slump. So any financial decisions should be made after careful consideration of your own financial objectives and position, and only after dedicated technical and fundamental analysis. However, we do live in a free market world, and this gives people a chance to do what they like with their money. And if buying tokens for investment is what they want to do, my job now is to offer a snapshot of the week with information that could be used in navigating the crypto space moving forward. So in today's show, we'll take a closer look at the stablecoins and giving new meaning to the term whale watching. We'll take a glimpse at how the Bitcoin whales affect the price of Bitcoin. We'll also fill you in on the controversy surrounding Tether, and it wouldn't be the Crypto Buzz if we didn't feature Cardano this week, now would it? So stick around till the end because we'll have a look at Bitcoin halving and how it's impacted the price of Bitcoin over the last 10 years, as well as some of the crypto market indexes that can be used to help with your analysis. So as the regulators are honing in on the cryptocurrency space, stablecoins, which have claim to 3.77% of the total crypto market cap, reaching close to $75.3 billion. This asset class has moved under the eye of scrutiny as popular belief from the economists shows stablecoins have the ability to shake up the financial markets, causing more instability than the existing highly volatile cryptocurrencies themselves, yet more directly due to them being intrinsically linked to the value of the dollar. There are basically four types of stable coins: those that are fiat collateralized, being the popular Tether, Trust Token, and the Winklevoss brothers Gemini. The crypto collateralized tokens such as Maker DAO's offering, and the commodity-backed coins such as X-Bullion Gold, and the non-collateralized or algo-based coins known as Basis and Carbon, which rely on smart contracts. So stablecoins seem to have their advantages in the crypto economy, with low fees, ease of use for cross-border transactions, which offer security, liquidity, and in some cases the ability to transact anonymously. Now, being asset-backed, they seem to offer the benefits of an economic safe haven such as gold, but how stable are stablecoins? Let's take the price of Tether as an example. Now the fifth most popular crypto by market capitalization, having reached a milestone of $64 billion in market cap just this August, has stayed around the $1 mark and even rose a little above $1, reaching $1.21 back on May 27, 2017, and $1.09 reported about 3 years ago. So to help put this all into perspective, Bitcoin, the most popular crypto, has a market cap of $856.4 billion. And that was current as of August the 11th, 2021. Now, although most price fluctuations of a stablecoin is around 1 or 2 cents or under, this varies from coin to coin, of course. Being still a DeFi, stablecoins, which first came into existence in 2014, couldn't function without centralized management systems related to the inherent underlying asset. Volatility should be considered when investing in stablecoins, and the other issue is how policy and governance surrounds the synthetic asset. So stablecoins came into being to harness the benefits of cryptocurrency along with the elusive price stability. However, out of the 24 stablecoins that have failed, 16 of those were pegged against gold as the underlying asset. And Tether has seen some controversy over the years, and we will discuss that in more detail. The probes and lack of evidence to prove that Tether was flouting investors' expectations of what it offered caused the price of Tether to take a temporary tumble under the $1 level down to about 86 cents in mid-2018, but more on that later. However, market trends show stablecoins are where investors park their funds to escape volatility. But how does that affect the prices of cryptocurrencies such as Bitcoin? We'll take this into consideration now. So this is especially so when the investors with large crypto holdings, known as the crypto whales, cause price fluctuations through the movement of their assets, causing price dips in the cryptos by moving across to the stablecoins and vice versa. For whale watching of the crypto flavour, head to Twitter pages at @whale_alert and at Glassnode Alerts to track what the crypto whales are doing. Now, we've reached a time where we'll take a short break, but after the break, we'll take a closer look at the controversy surrounding Tether and the UK's regulators' probes into Binance. So please stay tuned.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With 𝐊𝐴𝐚 TV.
Welcome back, Sage here. You're watching the Crypto Buzz by 𝐊𝐴𝐚 TV. So Tether has been appearing in the news this year and it wasn't all good. Let's take a closer look at the stir surrounding the most popular stablecoin, Tether, now ranked the 5th most popular crypto by market cap. Earlier this year, the USDT issuer Tether provided the public with an attestation report, a novel offering from the blockchain company, and this has itemised the balance sheet with lists of assets and liabilities, as well as the total reserves for May 2021, which outlined that 50% of which was held in commercial paper. So prior to the release of its first report, Tether Holdings was required to disclose its reserves and liabilities as part of its settlement deal with the New York Attorney General's office earlier this year. So earlier this year, the New York Attorney General alleged that Tether and Bitfinex were not being honest in a cover-up of roughly $850 million in customer funds. Since June, it is now illegal for Tether to perform business in New York due to the mismanagement of a financial enterprise. And the blockchain company was charged $18.5 million in fines. So let's go back in time now to get some clarity on what has eventuated. In 2014, Tether was founded and named Real Coin based on the idea that Tether would be backed on a one-to-one basis by the US dollar, and this was confirmed by their website advertising. In their own words, every Tether is always backed one-to-one by traditional currency held in our reserves. So in an interesting twist, 2017 saw the leak of documents called the Paradise Papers, which showed the two blockchain operations, Tether and Bitfinex, were working together. However, it had been outlined by a spokesperson from Tether that the companies were separate in their operations, having original objectives. What is interesting to note is that in February 2019, the website text had been updated on the Tether website, detailing that Tether tokens were backed by cash reserves as well as equivalents, including loans. So even more disturbing is the news that Tether Limited advised investors who hold Tethers do not have contractual right guarantee or other legal claims that Tethers will be redeemed or exchanged for dollars. Now, if this doesn't make you want to read the fine print on all your financial instruments, I don't know what else will. But the plot does thicken after further investigation. The legal representatives of the stablecoin Tether put out on the 30th of April 2019 that each Tether was only supported intrinsically by 74 cents in cash and cash equivalents. And only after the investigation by the New York Attorney General did Tether provide further information to the public in May 2021. And this published report showed that 2.9% of Tether was backed by cash and that approximately 65% was backed by commercial paper, being secured loans, corporate bonds and other precious metals. Now, more from the trending world of the crypto regulators. In London, the British financial watchdog has prevented major crypto exchange Binance from operations after a slew of probes into the company from across the globe. We'll have more on this scenario as it develops. With the rise of institutional investors into the cryptocurrency space, there is a clear indication that it is a growing sector. However, a stern warning was offered from the chairman of the US Securities and Exchange Commission, or SEC, that DeFi projects were not immune from governance. Although operating without a centralised authority, projects that provide investors with digital tokens and incentives could enter the regulatory territory. It seems all that glitters does not glow for the crypto world as it emerges into the mainstream. And after the break, we'll focus our lens on this week's crypto champagne supernova as it shoots up into the stratosphere. How high will Cardano go is the question on everyone's lips. Stay tuned.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements.
With 𝐊𝐶𝐴 TV.
Thanks for your time joining us for the Crypto Buzz by 𝐊𝐶𝐴. I'm Sage, and as promised, we are shining the spotlight on the MVP on the latest rebound in the crypto market, Cardano, now the third most popular crypto by market cap. And the start of last week saw Cardano's price surge approximately 70% in the last 30 days from $1.41 US up to around $2.70 to $2.80 per token on Monday, 23rd August 2021. And today it has increased again to sit around the $2.85 mark, which has completely eclipsed the previous high of $2.30 during the May 2021 rally. Widely known as a more eco-friendly option to Bitcoin, it uses a proof-of-stake protocol like Bitcoin, which still makes Ethereum more energy efficient in the mining of coins. However, Cardano is said to outdo Bitcoin in its ability to be energy efficient, reportedly being 4 million times more green conscious than Bitcoin. Greater functionality on the smart contract networks and upgrades to the Cardano technology is said to be what has caused the price surge, similar to what catapulted Ethereum's price after the London hard fork upgrade to ETH. Cardano does have similarities with ETH, as it will be working to provide smart contract modalities in the future. And the Cardano ADA token has risen over the last year by 1,500% approximately. And although analysts have mixed views on whether this coin is bullish or not, as the altcoin has gained the interest of the retail investors and not the institutional investors, unlike its peer Bitcoin. And speaking of which, after the break, we'll navigate into the phenomenon of Bitcoin halving. So please keep watching.
Hi there, James Preston for 𝐊𝐶𝐴 TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. 𝐊𝐶𝐴's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to 𝐊𝐶𝐴 TV.
Welcome back, and thanks for joining us in our last segment on today's edition of Crypto Buzz by 𝐊𝐶𝐴 TV, and I'm your host, Sage. Sad but true, but Satoshi Nakamoto, the elusive inventor of Bitcoin, has fixed its supply at 21 million in the aim to map out what creates value for Bitcoin. The genius inventor, who has not been found to this day, has included this in the white paper origination document, Bitcoin halving. And this is where Bitcoin halving lessens the amount of Bitcoin that can be mined through each block, making Bitcoin highly scarce, which in turn translates into higher value. So how does this functionality create incentives for Bitcoin miners, I hear you ask? Well, Bitcoin halvings has been seen as the precursor to massive surges in the price of Bitcoin. And this is the incentive the miners need. Although the rewards are halved to the miners, the price surge still is the motivation behind mining the digital currency. cryptocurrency, which involves solving complex mathematical puzzles, which every fortnight approximately, or 2016 blocks, the algorithm of the cryptographic puzzles are either made more difficult or easier to solve. And this change in hash rate can also be seen to correlate with the price of Bitcoin, especially on a large scale. For example, when large networks of Bitcoin miners are shut down, like what recently happened in China. Let's now take a walk down Bitcoin's memory lane to see how Bitcoin halving has historically altered its price. But halving is not the only factor that should be considered when attempting to analyse the price of Bitcoin. So 2012 was the event of the first halving, and this saw the price rise from $11 to $12. Yet in the following 12 months, the price then jumped up to $1,100. In 2016, after the completion of 420,000 blocks, Bitcoin's price bounced between $500 to $1,000 for some time before December 2017, when it surged to $20,000. And only recently in May 2020 occurred the third halving, and again this marked a bull run for Bitcoin, which saw the price move from $9,000 in May to reach $20,000 in December 2020. So Bitcoin mining indexes have also been used to give investors some indicators to help forge correlations and patterns in the price movement of cryptocurrencies. The common Bitcoin mining indexes are Miners Position Index, or MPI, and the Total Miner Halving Capitulation Index, as well as the Bitcoin Price Index. To add to the fray, however, 𝐊𝐿𝐷𝐷 Technologies has launched a new index product which appears on 𝐊𝐿𝐷's Hash Rate Index, inclusive of 50 publicly traded companies who are stakeholders in the mining of cryptocurrencies. So this is in the aim to provide the public with a ledger on the sentiment of mining, and the Hash Rate Index, newly created by 𝐊𝐿𝐷, will be a medley of purely crypto mining companies and those that have a stake in them, including chip manufacturers and the foundries. So as we continue down the rabbit hole of cryptocurrencies, we find more clues along the treasure hunt that add to our knowledge in how to navigate the investment of cryptocurrency in order to hopefully make a profit and add to the bounty. Although cryptocurrency investment is becoming more accepted, even by financial advisors with public pensions and super funds, including them, for the investment of their clients, the energy intensiveness of the process is still a deterrent for some. Good news is that Verity Funds has unveiled a sparkling new ETF on the ticker as RIGZ, and the Verity Cleaner Energy Crypto Mining and Semiconductor ETF is an actively managed fund with a 0.90% expense ratio. And the financial vehicle will contain a basket of stocks that is 80% green miners and 20% semiconductor companies. So hopefully that has piqued your interest to do some of your own investigation into the crypto space. Thanks for joining us on another episode of the Crypto Buzz by 𝐊𝐿𝐷𝐷 TV, and I hope you enjoyed our presentation and look forward to your company next week. As always on the Tuesday afternoon, stay watching 𝐊𝐿𝐷𝐷𝐷 TV for more live market updates, bringing you news on the economy and diverse themes and sectors. This is Sage signing off.